Paraidas and welcome to the midweek with Indiacharts. Today we have Jay Vora with us as always, and I'm going to quickly start bombarding my questions to Jay, and we are very excited to know the midweek analysis. So Jay, how are you doing today?
All good. How are you?
I'm doing very good. Thank you so much. So Jay, what we have seen is this week, we have seen some softness in the job data, and it seems like the possibility of a rate hike in September is gone. However, crude oil has risen recently and it is putting pressure on the US yields. And maybe the market is thinking that inflation will pick up again, which will eventually lead to a rate hike. What's your take on it, Jay?
Right. So first on the data points. So yes, the jobs data have come in soft. Basically, we have seen an inline sort of the non-farm payrolls. But at the same time, when you see the unemployment rate, that has inched higher. That has inched higher from 3.5 to 3.8. And if you see the internals of that, that is the average hourly earnings, that has come down, okay, from 0.4 to 0.2. So that means, the wage inflation is kind of cooling off, okay. And even the average weekly hours has increased a bit, okay. So all this data point, Fed is actually tracking very closely, and these are the data points what Fed want to see, okay, and that seems to be happening. So that is a good part, okay. And yes, the market participants are not expecting any rate hike in the month of September, but few of them are still expecting a rate hike in the month of November. Okay. Now the issue is that crude oil has risen very quickly in the past 1 week or so. Okay, and there has been some production cut as well that has been announced by the OPEC and the OPEC Plus. So yes, in that sense, it leads to some bit of pressure on the yields and on the inflation expectation, because eventually, see, what happens is that if your petrol, gasoline prices and all goes up, okay, it will have an effect on the end product, because your transportation cost increases, and that way, your the product which you are producing, even that ends up going higher, right? The cost of that. So all those things eventually put pressure on the inflation, and that is where the market starts expecting that inflation can again rise higher. But I have frankly heard two arguments to this. Even I am not sure what is really happening. But see, one argument is that the US has drained their SPR. Okay, SPR is nothing but strategic petroleum reserve. So they have drained it, and it is, I think, to multi-decade low levels. So now they are telling that if they will refill the crude oil, okay, in that SPR, so it will lead to a huge demand of crude oil, and that will lead to the prices rising higher. Okay, this is one argument. Now, the second argument is that while the crude oil was low, around those 70, low 70 kind of levels, at that point of time, China has lapped up a lot of crude oil in the reserves. Okay, so if at all the prices go up, they will again put oil in the market. Okay, and that can lead to some bit of cool off over there. So that way, what will happen is that each time there is a spike in crude oil, from the reserves, China will put it in the market, and that will lead to cool off of the prices as well. Okay, so if that happens, okay, and we sort of see those zigzagging kind of move in the crude oil, then we are okay. Okay, but if we see a vertical, one-way sort of rally in crude oil, then there can be an issue. So yes, that is an ongoing thing which people need to monitor. But as of now, things seems to be okay and in control. And even if you speak of yields, they are still trading below the previous high. Okay, so as long as that is there, I don't think there is any sort of worry, at this point of time at least. But yes, if the yields start rising higher, if the crude is rising higher, then it can be a bit of a problem. Okay, so that is an ongoing thing which we are monitoring. But as of now, things look okay and not that bad.
Okay, so as of now, there's nothing to worry and things look fine. That sounds good. So Jay, what I want to ask you next is that USD and INR have risen higher recently. and the dollar index is also inching higher slowly. This should ideally have a negative impact on the Indian market, right? If
Right.
yes, then a correction in the equity market is possible, isn't it? And if not, then what are the data points you are looking at this time at this time to make you confident about positive momentum in Indian indices, Jay?
Yes. So the answer for this is yes, and it leads to some sort of impact. Okay, but it is not like कि आज USD बढ़ा and आज ही market में correction आएगा. Okay, it will eventually lead to an impact on the equities market in the equity market. Okay, but if you tell me कि आज ही USD INR बढ़ना चालू होगा and it will go up and today only will there be an impact, then the answer would be no. Okay, so these are all trends which in the medium term correlates very well. Okay, ki USD INR, if it goes down, if it goes up, the sense is that the FIs could be pulling out money from the equities. Okay, so that is putting pressure on the USD INR, so that can have an impact. Okay, that is a valid argument, and we have seen that correlation playing out in the medium term. But it is not that ki USD INR aaj hi, I mean, it is rallying and it will have an impact on Nifty index or any of them immediately. Okay, and I will show you how as well. But yes, that is the thing. Now, when you say that which are the data points that I'm looking out for, which is making me confident that I mean, we may not see a major correction at least in the near term. Okay, so quickly let me share my screen. So when we look at the Strike platform, okay, here we have a dedicated page of sentiment indicators in which we cover all the sentiment indicators which are very important to understand the market trends. Okay, so one of them is the put call ratio open interest 9MA. Okay, so what this means is that this line which you see in the green, okay, is the put call ratio of the open interest. Okay, and that is smoothened by the 9-day average. Okay, so when this ratio is going down, okay, that means more and more people are shorting call option. Okay, and that is why this ratio is going down. When a person is shorting call, that means they are not expecting the market to go up. Right? In this case, what was happening is that while the market was going down, okay, the put call ratio was going up. Okay, which means that now the put shorters, okay, are feeling more and more confident that the downside could be limited, and that's why they are shorting put. Okay, so while the Nifty index was making lower low, this ratio was making higher lows. Okay, so this was telling you that the put shorters are getting more and more confident, and now as the market is picking up, you can see the ratio also picking up, which means that put shorters are now becoming more and more confident. Okay, so it is only when this ratio, say, if you see in the past few months, this has been the range. Okay, so if it comes over here, I will be a bit concerned and I'll see how the setup is. But yes, I mean, while we are still in this oversold zone, there is a good chance that this indicator picks up and this can lead to an up move in the Nifty index in the near term. Okay, now this is one indicator. Now the other indicator is put call ratio, but this is the volume one. Okay, this is actually inverse of the open interest, because in this case what happens is that if the ratio is high, okay, that means it is telling you that a lot of put is getting traded.
Right.
Okay, when put so put is getting traded, so that means ke wahan par there is more and more fear, and that is why a lot of puts are getting traded, right? So when this ratio actually comes down, that means it is telling you that more and more volume is now happening in call option. Okay, so this you have to think from a buyer perspective. Okay, so this is when this ratio, when it comes down to 0.3 or somewhere below 0.5, okay, that is where you will start getting a bit concerned, because see, historically when you see, okay, sorry, so yeah, historically when you see, you will see that whenever the market bottoms have occurred, okay, typically this ratio has been on the higher side, which means a lot of activity is happening in the put. Okay. And when this ratio is towards the lower end, okay, that is where a top actually occurs. So right now we are actually at the top end. So while the market is going up, okay, this is telling you that the market is going up on the disbelief of the people. I mean, people are still not able to digest ke ye Nifty upar chala kaise gaya, okay, and they are probably feeling left out, and because of all the geopolitical issues and all the macro issues that we are seeing right now, that is probably keeping people away from the Nifty index. Okay, so from a medium term perspective, this is still telling you that the rally on the upside, from a medium term perspective, is not over. Okay, what might happen in the interim is that it can go up, then it can come down, and it can again go up. So that way this indicator will behave something like this. And at the point when it comes to around say 0.45, 0.50 kind of level, that is the time that you actually need to review and see, okay, what are your wave count telling? Is there something that is ending? Is there a negative divergence or something that we are seeing on the momentum indicator and all that? Okay, until that doesn't happen, I honestly will not be so worried. Okay, so this was the second data point. Now the third data point is that in this correction which we had seen in the short term, okay, we have actually seen a good cooling off of this ratio. Okay, now this is the advanced decline ratio, and that we have smoothened it with the 20-day average. Okay, so when it is rising, it is telling you that the breath is now picking up. Okay, and typically in the past also you will see that whenever a top occurs in any of the index and we go for a short term correction, you will always see negative divergence. Okay, which you can see over here. I mean, the prices are making higher high, but this indicator is not making higher high, and that is telling you that the momentum could be losing. So something of that sort you can see somewhere over here as well. Okay, but this ratio will probably come over here and then peak out, and then it will go down. So that is again telling you that the up move could not be over yet. Okay, there could be some more upside that is left. And what is telling us that that is possible is when you see the 40-day ratio. Okay, even 40-day ratio, like I said, it will typically lead to some sort of divergence, like you can see over here. Okay, this was the point when it was the peak, but when you see the top, it actually occurred over here. Okay, so यहाँ पर भी divergence हुआ, wherein the prices made newer high, but this ratio did not make a newer high. Something of that sort is similarly happening over here. So I would expect that it can go towards this overbought zone, and only then it falls. Okay, and that will tell you that some more upside could be pending in the near term. And later on, we will discuss about the wave count as well. So this thing is actually matching with the wave count, because even the wave count is actually telling us that one more leg on the upside could be pending. So that we'll discuss it. And one more important data point which people should watch out for is the FII's positioning in the futures index. Okay, so over here you can see that at the top, they were bullish by, I mean, they were net long by around 1 lakh contract or so. Okay, so over there, this time it actually sustained at higher levels. Typically what happens is that they go towards that level, and then there is that sharp unwinding of the long position. But this time, because it was sustaining at higher levels, okay, so it took some while to reverse, but once it reversed, it led to some short-term correction on the expected lines. Now you can see over here, as the index is picking up, okay, you're seeing the long positions of the FIs again picking up. So basically they were net short by around say 30,000-40,000 contracts, and now it is coming back, and they are now plus 7,300 contracts or so as of today. So today's Bhav copy needs to be checked and uploaded. But yes, I mean, that is how the positioning is. So I would expect that, even this should inch higher as the market inches higher. Okay, and that is where then maybe eventually you will see some negative divergence, like we have seen over here, and only then it peak out and it sees some correction. So, these are few data points when I see, okay, it makes me confident that, especially when we see this volume put call ratio, okay, this being at a higher level. I mean, it is not even out from this panic level yet. Okay. So that is telling me that a lot of people are still concerned and they are trading in put options. Okay. And that is why you're seeing this ratio on the higher level. So this ratio needs to cool off significantly to say that a medium term top is occurring. Until that doesn't happen, you will get those routine sort of correction wherein we go higher and then we see some correction, we again go higher, we see some correction, and that way it will continue. So that is how broadly I'm thinking about the Nifty index. And it is not to forget that we have broken out from this range, okay, I mean of this consolidation. So this appears to be a pullback. This is something that we had discussed earlier as well. And now it seems that the shorter term correction is getting over, okay, and it should be inching higher. So yes, that is why I feel, I mean, when I look at this sentiment data points, I feel a little more confident that the top is not in place yet. Okay, there is still some room on the upside.
Thank you so much for that, Jay. And for guys who are interested to know the Strike platform more and to want to learn how to use it better and get better insights on it, we have an exclusive Zoom interactive session this Saturday. It's on the 9th of September on a Saturday at 10 a.m. Okay, you can join us for free. You can register absolutely for free. This live session will be taken by our chief analyst and our founder himself, Mr. Rohit Srivastava. Joining in would be Mr. Shivam Gaba. So we'll see you guys there. Okay. And Jay, coming back to you, I have my third question for you. So the sentiment indicator data points aren't at an extreme point as of now. Okay, I completely get that. So what is your wave count on the Nifty index, Jay? And are the wave counts for mid cap and small cap similar?
Okay, sure. So I'll share the screen and I'll do it on Metastock because I find this more, this is very easy for markings. So I hope my screen is visible to you.
Yes, it is.
Yeah. So see, when we look at the wave counts, okay, what we do is that for an impulse, okay, you need to have a 5-wave rise, correct? Now, if the rise is getting extended, then you will add 4 more waves to that, okay, in which case it will become 9 leg, okay? So that is equal to 9 legs. So when we look at the weekly chart, okay, what we can see is that this is 1 leg, 2, 3, 4, 5, 6, 7, 8, and now 1 more leg on the upside, which is the 9th leg, okay, that is pending on the upside. Okay, now what it means is that when we do the internal wave counts, okay, so this is how it is: 1, 2, 1, 2, 3, 4, 5, which is nothing but 3 of 5. Now this is 4, and 1 more leg on the upside, that is the 5th wave should come by. Now I know many people would say, but yahan pe to 3 chota hai, okay? So what we do is that we count the number of legs on the weekly chart, and that is telling you that it is 7 legs, correct? Now when we look at the daily chart, okay, and we do the wave counts, so it will turn out to be a little different, okay, in which case this will be 1, 2, 1, 2, okay? Now this will actually be again a 1, 2, okay, this will be 1 and 2, then this is 3, this is 4, this is 3, this is 3, this is 4, this is again 1 more 3, this is 4, and now 1 more leg on the upside. So in this, in case of daily, what is happening is that it is becoming 5 plus 4 plus 4, which means 13 legs. Okay, so if we count the number of legs, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, okay, 12, and now 13th leg on the upside, that is 5 plus 4 plus 4, which is 13th, okay? So the 13th leg now on the upside should unfold, okay, which means that the 5th wave, usually is equal to wave 1, when we do that from the bottom, okay, the upside level comes to somewhere around 20,320 or so. Okay. So that can be the upside, the potential upside level to watch out for on the Nifty index as the wave fifth unfolds. Okay. Now, when we look on the weekly chart for the small cap index, okay, first we'll go to the mid cap index and then we'll look at the small cap index. So when we look at the Nifty mid cap 100 index, sorry. Yeah. So when we look at the mid cap index, so there is a lot of extension on the daily chart. Okay. But when we look on the weekly chart, you can see that this is wave one, this is wave two, this is wave three, this is wave four, and now wave fifth is unfolding. Okay. Now within that, if you see, okay, even on the lower time frame where we consider this as wave four, then over here also we can see 1, 2, 3, 4, 5. Okay. So now you actually need to be a little cautious because it is telling you that it is, nearing its up move. Okay. Which means that Nifty probably might be in this stage right now. Okay. But the mid cap index, which has been rallying very hard. Okay. It is probably towards the end of its up move. Now, what are the confirmations that you look out for to say that the mid cap index is pleasing? Yes, for to say that the correction, the up move is completing, you actually need to break the 20-day on a closing basis and sustain below it. Because if you notice that the entire rise which we have seen from the bottom to the top, okay, this dotted red line, which is nothing but the 20-day average, that has not been broken on the downside. Okay. So if that breaks, that will be the first warning sign that the entire up move from this point to this point is getting over, which means that there can be either a correction or there can be this sideways sort of movement for a prolonged period of time. Okay. So this is something which people need to understand. And typically in the last leg of the up move, now we also see some sort of divergence. Okay. So in this case, it can happen that while the mid cap index, the Nifty index actually goes towards the 20,300 kind of levels. Okay. But at some point, small and mid caps stop participating. That can definitely happen. The reason why I feel so is because when we look at the equality level, okay, in Elliott wave, we say that wave 3 should not be the shortest. Okay. So in case of the mid cap index, it will become shortest if it actually surpasses this level, which is say somewhere around 41,000 or so. If it surpasses that, then probably the counts will get negated. So that, or else, we will have to see what are the wave counts on the daily chart. Because like I have done over here, the wave counts on the daily chart, that will then need to be seen. But right now we are just broadly looking at the weekly chart. Okay. So over here, if that level, which I said was somewhere around 41,000 or so, if that gets surpassed, then we will probably need to look at the wave count. But as of now, the thinking is that probably before that, the up move can falter. Okay. So that is where we need to maintain a little bit of caution on the mid cap index. And if there is a close below the 20-day average, then you need to be worried even more, and you actually need to look at your holdings in the small and the mid caps, whether they breaking any major averages or no. Okay. Now this similar setup is actually there in the Nifty small cap index as well. Okay. So when we look at the small cap index, over here. So when we look at the small cap index, so over here as well, when we look at the weekly chart, you can see a nice 5-wave rise over here. 1, 2, 3, 4, 5. Okay. So a weekly negative close will be the first signal that probably something is getting over. Then, like I mentioned, similar to the mid cap index. Okay. Similar to the mid cap index, if it closes below this red dotted line, Okay, if it closes below this red dotted line, then you need to be a little worried, because see, over here, frankly, what is happening in the small cap index is that while we had seen a clean 5-wave rise in the mid cap index, in the Nifty small cap index, this rise is overlapping, okay, which makes it 1 2 1 2, then 3 4 3 4 5. Okay, that is how ideally it should play out in the small cap index. But yes, I mean, if at all it closes below the 20-day average before that, then there is a possibility that internally it might have done that 3434, which we are not seeing it on the daily chart. Okay, so again, over here, the point of caution will be a close below the 20-day average. And if that happens, then you seriously need to review, because see, then what will happen is that this entire rise will get completed. Okay, now whenever one entire rise get completed, there are two things that are possible. One is a price wise correction, or you can see a time wise correction. Okay, both can be painful, but for the investor, time wise correction could be much better, because it might not dent their portfolio a lot. Okay, but yes, I mean, if there is a closing below the 20-day average, then you will need to manage risk, and you will probably need to do some review of your portfolio. So yes, that is how we are thinking actually about the small mid caps and the main Nifty index. Okay, wherein in Nifty index, one more leg on the upside is pending, but in the small and the mid caps, they are probably inching towards that end point. Okay, and that is where a closing below the 20-day average, that will be very important. If that happens, then one needs to review and one needs to be careful. But yes, if you ask in terms of risk reward, which is more good, so definitely large caps are the one which are just starting its rally on the upside, I feel. Okay, so once the up move unfolds, okay, that's where probably I think a good money could be made in the Nifty index and not in the small cap and mid cap index, because like I showed you, they are probably nearing towards its end. Especially in the mid cap index, there is a 5-wave rise that is very much visible from the bottom. Okay, so we'll wait for some confirmation. So it is not that we are jumping onto the guns के cap and small cap correct हो जाएगा, बहुत बड़ा correction आएगा. We are not jumping onto that conclusion. We need to see further more evidence of that. Okay, but our Elliott wave count is telling us that we are reaching that goal post, which probably small and the mid caps wanted to cover.
Okay, so that's wonderful, Jay. Thank you so much. That actually gave us a lot of clarity. And for the people who would like to get to know our platform even better, get the first-hand usage of it, you can join us for an exclusive Zoom interactive session. Once again, reminding you about our interactive session on Saturday. It's going to be sharp at 10 a.m. Okay, and the registration is absolutely free on the 9th of September. Okay, so I'm going to leave a link on the description. Just click on the link and get yourself registered. And while we are at, I'm also going to give you the link of Strike YouTube channel. Okay, you please get onto our channel and subscribe yourself onto the channel. You can get a first-hand notification for all the videos, and you'll be up to date with all the videos on Strike platform. Whilst you are here, subscribe to Indiacharts channel as well and click on the bell notification. And that's it. We are signing off for today. Thank you so much for joining us for the midweek with Indiacharts once again. This is Shilpa Raidas, and thank you so much, Jay, once again. Yes. Take care of yourself, guys. Thank you.